Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The UAW is now on strike against General Motors, Ford, and Stellantis. This is a strike that could cost around $1 billion per day that workers are on strike. It doesn't seem like anything is going to be happening over the weekend. So what do we need to know about this, and what do the negotiations look like moving forward? That's what I'm going to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I want to start with what we know about what has been offered to the UAW so far. This is from Unicus Research. This is what is on the table, at least as of today, September 14th. Wage increases look like they're going to be about 20% initially, and then GM is offering 10% in year one. The UAW would like a 36% increase in wages, and then other increases on top of that in coming years. The big thing that could be a sticking point is the 401k. The companies are offering 401k contributions. This is pretty standard today. And the UAW would like a return to what's called defined benefit pensions. That's what's typically called a pension. And that's where you know exactly what your payment is going to be each month in retirement, depending on how long you work somewhere, your age. There's usually factors like that. The challenge with pensions is that those are liabilities that are usually on companies' balance sheets, and they have to invest to be able to have the money to pay for those retirements. These are the kind of liabilities and costs that have bankrupted a lot of companies, including General Motors during the Great Financial Crisis. So probably not something they're going to go back to, but look for maybe better benefits in the 401k side, which is a defined contribution. And like I said, the defined benefit pensions have, for the most part, gone away outside of a lot of government workers to a more defined contribution like a 401k. From a company standpoint, the impact probably isn't going to be felt all that much, at least for the next month. The auto industry has really built up inventory over the last 6 months to now about an average of 100 days of inventory. Now, that depends on the vehicle, but there's a lot more inventory today than there was, let's say, 6 months or a year ago. So these companies have been preparing for this for quite a while. And so business is going to go on as usual, at least I would say for the next month or so. The question is going to be, if it lasts longer than that, then what happens? We have seen that price increases have actually happened as supply has been impacted over the last couple of years. So one of the ironies is when supply goes down, prices actually go up. Companies start making more profit on a per vehicle basis. Do we see that happen with this strike, where we now suddenly don't have as many vehicles as we used to, but the companies are actually making more margin per vehicle? So it's actually not that bad for them for a period of time. Now, there's a limit to that. You have to keep making vehicles, but we have seen that being in a structurally undersupplied environment in the auto industry is not necessarily all that bad to these companies' bottom line. The other big sticking point is that electric vehicles are obviously the future of the industry, but it takes fewer people to assemble an electric vehicle than it does to assemble a traditional vehicle. So does that mean that the UAW would like to unionize some of these new plants that are sometimes joint ventures with these automakers and have more guaranteed jobs? But that may not be something these companies would like to agree to, because there should be a structural cost advantage to moving to electric vehicles in the future. So there's a lot of moving parts here, but I think the biggest thing is that the union's demands and what companies are already offering, at least on a wage standpoint, is not all that far apart. I think both of those sides can probably move a little bit. The 401k and pension could be a bigger sticking point, and there's a lot of details to work out in there. But I think right now, especially if you're these automakers, the business is too good right now to let this go for too long. So while this is a worry as an investor, I own shares of General Motors, I don't think this is ultimately a deal breaker unless the strike lasts for 2 or 3 months. And then we can kind of revisit it. But what do you think about what's going on in the latest with the UAW strike? Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.